Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis to updated commodities, work our way through the dollar, yields, precious metals, and commodities ETFs that I follow. I'll interject my financial opinions, and if you need help with anything, check out finding-value.com, where I dive deeper into all of these topics, into individual companies, and the companies that I'm playing for this bull market are shared on the website. We still have the May Day coupon code that is active. So let's take a look, dive in here, and see what's going on today. So the dollar starting there, we are still squeezing up into this pattern here. Nice big move higher, coming on up, and we're making higher lows, higher lows, higher lows, and we continue to make higher lows. One thing that could disrupt this and break to the downside is if yields start to pull on back, and that is what we're seeing. So I'm being patient here. I'm watching the dollar, and I think there's a possibility that we could break lower, given that yields are looking a little bit weak. But we could see still a break to the upside if yields are doing a false breakdown. So I'm being conservative, just waiting to see which direction this thing breaks. I would gain even more confidence if the dollar broke through this level here to create a new, fresh, lower low. So we want to see lower highs, lower lows, and that has not at all occurred yet. We still have higher lows, and the highs are consolidating into this triangle pattern here. Yields are dropping. We could be falling out of this below the downtrend in the pattern. We very well could accelerate to the downside with yields dropping on the 2-year. What does that mean? It means that the Federal Reserve most likely is going to lower interest rates, and the 2-year is front-running that. A lot of the times, the 2-year drops, and then we see a potential slowdown in the system. That's why it is dropping. People are running to safety, and the 2-year yield is where they run, the bond, two-year bonds. 10-year yields dropping still, and that does look like we could eke out a potential move lower here. That's support that I drew in there, and we are falling towards the bottom end of this pattern here. We very easily could drop here. So 10-year yields looking weak, the 2-year yields looking weak. And we were down in the 30-year, but that's easily well within the pattern for the 30-year. And the 30-year doesn't move as much. So we're still in this pattern. We're still consolidating for the 30-year yield. And some people have even said that the 30-year could go up while the 2-year went down, and it's possible. I doubt it, but it's possible. Because a lot of the times the curve does move in synchronous over a medium-term time frame, and if the 2-year is dropping like a rock, more than likely the longer the curve's dropping a little bit too. But that's yields today. Basically, the short end dropping more than the long end. TYX TNX ratio is up and would be supportive of precious metals. We have broken through the downtrend here if it decides to show up here. All my ratio charts are taking a little bit longer to load for some reason. We have broken through this downtrend and we are heading higher, and that is supportive of gold moving on up. Bond prices are moving on up. We're up a little bit today, and we haven't clearly broken out of this pattern yet, but if we do, which it does look like it wants to, we break on out here, that's more than likely means yields are dropping, and maybe a potential slowdown is coming. And we're going through that slowdown right now. That's what the bond market is basically pricing in if we break to the upside here. And then the 2 and 10, we had a slight disinversion, I guess, uninversion of the yield curve, just very slightly, but still we are at an inverted state and nothing to worry about yet. We are still kind of in a holding pattern moving sideways. Gold, now I don't know if this is correct because when they roll contracts, it moves it. So if I type in gold itself, I've got a 1% up day, and it looks pretty solid here for gold. So looking good, up about 1%, a little bit over $2,400 an ounce. Pretty strong there, pretty strong. We've got silver up 2.15%, looking pretty strong today. Short term, we still have some momentum to the downside that we might have to work off, but longer term, guys, we've broken all these resistance lines. Like it's up, up, up and away. We should be bullish, not bearish, continually here. Bull, bull, bull. Platinum also up 1.2%. Still need to break through that stupid downtrend line that we've been under for a long time, since 2021. And then palladium right at support. It is still at support, and this is the metal that I would consider to be out of favor. And I would hope that platinum beats up on palladium here, ratio style, where I can eventually have options to trade into other metals if this gets to ridiculously cheap levels. So GDX up a little bit, GDXJ up a little bit, and SILJ up a little bit. Notice that they all have roughly the same pattern. It still looks a little bit weak, though. I don't see a huge, big candlestick or anything like that. And we're still kind of stair-stepping lower. Maybe there's still more downside left in this thing before heading higher. That's what I see. But all of them are positioned well. And with gold and silver breaking out of their patterns to the upside, everything looks good to me on the longer term. XAU to gold ratio down a little bit, but it's still in a really advantageous area. Like it's broken through the downtrend line. Everything looks good. It's really cheap. Good spot to be looking here for gold and silver mining companies. And I do think this will work its way on up with time. Just takes time. Crude oil down 1%. I know we were down earlier, so we got a little wick on the bottom. The momentum is still to the downside. That has not changed yet. And we're putting in, my humps, my humps, my humps going on there. Fergie, that's what it is. But we'll see. Momentum's still a downside. We got to see a turn. I got to see some buyers come in here for me to change my mind. TTF gas up a little bit, 1.3%, looking good. And yeah, everything looks good to continue higher there. Natural gas in America up 4%, getting a bounce off this support line that I drew in a little while back. We'll see if we can get moving to the upside, but nat gas seems like whenever the price goes up, they turn on the taps and then bring the price back down. Boy, XOP, yeah, you know me, actually a pretty strong day today. XOP drastically outperforming crude oil. Crude oil was down 1% and XOP's up 1.3%. It is a bullish candlestick. Let's see if we can get some lift off here to the upside. We're underneath resistance. It's going to be a little bit of resistance trying to get through there, but it's actually very well positioned. If you told me XOP was putting in a chart like this, I would have said oil is going up. But that's not the case. If oil continues to go down, it will weigh on XOP with time. I've seen these setups before where it looks like we could trade higher in XOP, but the underlying commodity just doesn't break its downtrend. And it will bring the equities down with it if it continues lower. Our boy OIH, which is the energy service company, is looking good. We've got a nice big bullish engulfing there. That still looks good to go higher. Everything is well intact for a move higher. Newcastle coal futures down just a teeny bit. And again, sideways to higher is what my guess is because we've broken the downtrend. Broke the downtrend here. We're basically basing out right now, gathering energy for what I think will be a move higher in the future. Sprott-Fisby Uranium Trust up a little bit today. It's nice to start seeing some green candlesticks instead of all the red. But it still has work cut out in front of it, and the momentum is still lower until we get some buying pressure in there. And then uranium futures pricing is right at the tip here. It's getting real compacted. We look at the downward moves, you can see the downward moves are getting less and less and less. That is a bullish formation in a falling wedge to break higher. And if you want to buy the ultimate best prices, you're going to have to take a contrarian view against the negative sentiment that we have in the market today. So I'd be watching to look for a potential break to the upside with time here. We could see positioning in the ETFs before that occurs. We have a little bit. Momentum is still lower, and we do not have a reverse candlestick on URA yet, but that could show up at any time. Uranium also putting in a little bit of at least an effort to move on higher. Momentum is still lower. We have to work that momentum off. And URNJ also getting some buying pressure today, and the momentum is still, again, lower. We got to see it turn. And the first indication of the turn are large green candlesticks that put in bullish engulfings or bullish piercings or hammer candlesticks or a combination of all of the above. So we'll see. We'll see if we can get this thing and see if there's a bottoming forming. Copper moving sideways. It looks like, momentum is still lower. We got to get some green candlesticks in here. Got to get the momentum turned. Lots of support at about 390. COPX also still moving lower, down 0.76%, downward, and we'll see if we can put some bigger green candlesticks in the mix here. Otherwise, we could drift lower here. Iron ore down 5 point something percent. A lot of the times you get this on the right-hand side of a double bottom. You get a double bottom. These double bottom, let me see if there's another double bottom here. No, there really isn't. They usually have like a scaring sellout move, but iron ore still looks good. Still above support. Still all looks good. Aluminum down 0.37%. Momentum still to the downside. We just wait until we get some buying pressure. We're at support. Nickel also slightly lower, and the momentum's to the downside. Just be patient. Don't jump in front of the trains. Don't catch the falling knife. Just do smart things. Moo looks really good. I think this looks like a fantastic setup. It's a falling wedge going into support on that blue line. We zoom in. We've got bullish candlesticks that are forming here. The big green army and the small selling pressure. So I do think that this will break higher. It does look good. And we can see maybe pockets of the agribusiness ETF really start to outperform. Emerging markets down 0.45%. It looks like it's trying to find a base here. And this one's kind of, it's a touchy one because if the world is slowing down, emerging markets could come under pressure because of the slowdown. The declining rates will also have an impact on the dollar. And when the dollar declines, it provides upward pressure for emerging markets. So we'll see if this thing heads higher or if it is muted with the opposing forces of a weakening dollar and a weakening economy around the world. KRE up 0.95%. That still looks good to rip it onto the upside, even though we were up just a teeny bit, and we do have a reversal candlestick there, so we could go down slightly or consolidate to the right there. We've had a monster move here, and I think that's basically front running the lowering of interest rates, and that's why the 2 years falling. It's like they're all saying the same thing through all these different charts. TAN is down. We've got lithium down, REMX down. These all look kind of weak, and they all have similar patterns. And if we can have yields fall, which these are sensitive to yields, but if the overall market is weakening, that overall weakening of the market is going to draw these down to the downside. Baltic Dry Index is also going to be sensitive to base metals, coal, and the overall markets. We've pulled back to support. XHB, now this is a supply-demand. Demand will go up as yields go down. In 2000, 2001, we saw the home builders just rip it through that recession. So this could do the same thing. Looking pretty strong. Russell 2000, this is value. Looks good. We're sitting above the trend line support, and everything looks good to continue higher with time. The S&P 500 getting some selling pressure, down about 0.5%. It still looks like we're going to head lower, at least at this time. And then the NASDAQ, which is much more sensitive to interest rates and the economy, and could be the main driver of our weakness in the short term, at least. We'll see if we can punch through here or if we're going to stay above that support trend line, which we're on right now. SMCI, which is kind of a market leader that I've been watching, down 4.5%. Looks pretty weak, and it looks like we could easily head lower. I'm in the bear camp for all this stuff. I think that this is a shoulder, head, shoulder, and that this is an end of trend formation. This is your bull trap, and then you broke out of the bull trap, and we're going to head lower. That's what I see in the chart. But a lot of people are convinced that we're just going to continue higher. I just don't think so. This looks pretty weak to me. Nvidia is also down 7%. We have two bearish engulfing candlesticks. I've been watching this. I even thought we could potentially turn here. So again, these things can last longer than what most people think. But I don't know. It still looks weak. Momentum's to the downside. We've got support down here at about 95 bucks. Bitcoin down 2%. We're still in this big pattern. It's still holding on in that big pattern. And then Ethereum also has a very similar pattern. It's down 1.65%. Still could go lower here. It's possible. We came in down here and then a inverted flag pattern. But yeah, that's what I'm seeing there with crypto. And this very well could be an extension of the technology stocks going lower too. So if technology rolls over, I'd be curious to see what Bitcoin and Ethereum do. But that's what I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. If you'd like, we still have that Mayday coupon code that is active. I'll be releasing a midweek update tomorrow, sometime tomorrow. And that's all I've got for today, guys. So we'll catch you next time. This is Finding Value.